Gosh, it's really hard to answer. Like, where are we? It's like relative to what? I mean, I think the business has only sort of gone in, mostly one direction for the last 40 or 50 years, which is to say, more firms, more diversity of firms. Whether it's growth oriented, value oriented, distressed, small, medium, large, sector based. So the industry has gotten more. Competitive, more specialized in a lot of different areas. And I don't see those being, sort of trends that are going to reverse themselves. I think that'll continue to occur. And now you're starting to see another phenomenon with, the SPAC market, almost being, could arguably be an entirely different, sort of subsector of private equity. It's sort of like public private equity. But anyway, so it's really hard to answer the question, like, where are we now? I don't know. I mean, I view this business as an absolute return business. Private equity is an opportunity to take advantage of a market where hustle and intelligence and good analysis still makes a real difference relative to investing in public markets. Public markets, there's hundreds of hedge funds, and all of them have access to basically the same information at the touch of a button. Private equity is a lot harder. You still got to get out there. You got to hustle. You got to find deals. You got to establish relationships with management teams. So to a certain extent, unless and until some sort of technology replaces that function, there is still a lot more inefficiency and therefore opportunity in the private market. So I view it, really in an absolute sense. Like, I'm just looking for what I view as good risk-adjusted returns, almost regardless of what the market is doing around me. So, what does that mean? I don't know. I mean, if it's you obviously have to look at, like, the fixed income markets for sort of where, like, the risk-free rate is and the base level of return, and then you add a premium, to there. So, so it's relative. The returns you're looking for are relative in that sense. But I think that, if you can find opportunities where you think you've got a chance to, triple your money, quadruple your money, and you think the downside is relatively limited, I don't spend so much of my time thinking about being super precise about that. I need 4 times my upside and 20% downside, or it's hard to be too precise. It's really, there's a lot of qualitative aspects to it as well. So I don't know. I don't focus too much of my time and attention thinking about where are we, in the cycle. I mean, obviously, right now we're in a unique circumstances with COVID, and you do need to think extra hard about what is the future of this. Like, is this business going to exist because of trends that have, accelerated? Like everything that's happening in COVID right now is just sort of accelerating trends that were already there, kind of outside the aerospace industry, which is, suffering really from I think a temporary blip. Other things like commercial real estate, retail, and stuff like that. Like these trends were already there. They've just been exacerbated by COVID. And actually, frankly, you could argue a little bit of that on the travel side as well. Like, why should I fly to, wherever to give a presentation like this when, everybody can do it, sitting in their office or sitting in their home. So there will be more of that, I do think. Anyway, I don't know, I sort of got off on a little bit of a tangent, but hopefully that answered the question.